Hey guys, welcome back. In today's video, we are talking about how Citadel needs 500 million, shorts in need of shares, manipulation core, and many more in this video. First, we're taking a look at this. Citadel looks to raise at least $500 million from bond sale. So the LP, the hedge fund manager founded by Ken Griffin, is looking to raise at least $500 million through a corporate bond sale, according to people with knowledge of the transaction. And so the offering may include notes with maturities in the range of 5 to 10 years, and the people asking not to be identified discussing private information. So this is something that we've seen in the past where firstly we saw how Ken Griffin said that he was willing to sell a small stake of Citadel for cash. And now what we're seeing is how they're trying to raise money from these bond sales. Now, obviously, what's weird about this is when you think about a company that's posting that they're making tens of billions of profit every single year, that their financials are doing very well, they're able to pay out to their investors. Why is it that they still are in need of cash? Why do they need $500 million when they're making over $16 billion in one single year? You know, and this is what's obviously weird about this. And you can see what a great coincidence this pops up exactly the same day we warned about GME swaps were starting to enter forced delivery. Narrator, does Kenny need money to meet margin call requests by any chance? So for those of you who obviously don't know, we've seen many things. Now, one of the things were obviously the GME swaps that were starting to enter forced delivery. One of the biggest things that we talked about, especially last year, and it's finally coming to fruition this year, is in terms of the liquidity with these institutions. We talked about how the margin requirements are getting bigger and bigger, but yet their capital, the amount of money that they have, are actually starting to decrease. We've seen this from plenty of different sources. We're seeing the reverse repo going down. So that's one easy access going down. We've seen how the collaterals in the overall markets are falling. So again, another decrease in their liquidity. We've seen how cryptos aren't able to be used as collaterals as well. So multiple different areas, which shows us that institutions will be lacking liquidity going into 2025. And is what we're seeing right now. So the very fact that they are in need of money, despite the fact they've posted how well they're doing, really begs the question, are they in need of capital right now? Are they worried about something that's happening? And hence why they're trying to raise the money. Because when you dig further into what's happening right now, you can see someone's obviously in bad need for huge amounts of AMC shares, and there indeed seems to be an explanation for the urgency. And this is obviously what we've seen with how, we see with, again, Citadel trying to raise money, how we're seeing with the short interest increasing in both AMC and GME, how we're seeing the glitches happening, how we're seeing the suppression and manipulation happening on the AMC price. You know, all of these are just reflecting what's happening. And another thing, and you can showcase why they're in need, and I think this was quite a good find. So this was a post back in the 14th of May 2024, where it was made by Denari, which they said, thrilled to announce AMC D shares are now on Denari. Now, what they are, again, and anyone can obviously find this out if you guys search Denari, is that they are a security-backed tokens which provide direct exposure to assets. Now, what you'll find similar to this, essentially, this is tokenized shares, something that we've seen in the past used plenty of times. Now over here, they're using it for, you guys can see, Amazon, for Apple, for Google, and of course other stocks as well. But it's interesting that it's happening for AMC as well. We've known that there's been a history, of course, with AMC's tokenized shares. And when you take a look at this, and you guys can see the reflection in price, so AMC saw the sudden spike in price on May 14th of 2024, and that's exactly when this was announced. So obviously something was happening here. Now, we've seen, and we covered in this video yesterday as well, in terms of the amount of bundled and cluster shares they were, about how they were transferred to different addresses. And these were tokens that were ranging from 3 trillion tokens all the way up to 36 trillion tokens. So clearly is that there's always been an over excessive use of AMC tokens. And the fact that we saw it being announced on this website, and then we're suddenly seeing it having a increased price action on the very same day, clearly showcase that that's of course something going on. Now, like I said, when you understand the history, we've seen it with FTX, we've seen it with Bitpanda, we've seen it with others in terms of how they used AMC tokens to manipulate as a way of locating and settling shares. Clearly, something is happening. Now, another explanation for this is that clearly Denario is trying to say, you guys can see here, backed 1-to-1. So if they were, of course, releasing this and they are trying to actually back it 1-to-1, it also could explain, you know, of course, the increase in price. But like I said, it's just interesting that something was happening. Now, let's take a look at the manipulations that's being caught and called out. But again, I think more harsher consequences needs to happen. But nevertheless, let's take a look at the manipulation. Just in, SEC has fined Robinhood $45 million for many securities violation. So according to SEC order, the violations by Robinhood relate to the following conduct. Firstly, what we have is suspicious activity reporting from Jan 2020 through March 2022. Robinhood failed to timely investigate suspicious transactions, resulting in systematic failures to timely file suspicious activity reports. Now, what's interesting about this is the fact that it starts from January 2020. Now, obviously, this will ring a bell for many people because that's obviously when AMC and GME had the whole situation. And so this was when it started, and they failed to timely investigate, and they failed to timely file the suspicious activity report as well. Now, ask yourself, what suspicious activity could have happened in January of 2020? The answer is obviously very obvious. I'm sure everyone obviously understands what I'm talking about here, and that's what the systematic failure was. Now, you can go furthermore into this. They talked about the cybersecurity. Now, this is something that should be worrying, especially when you're a user of Robinhood. Now, as always, none of this is ever financial advisor. Do take out a second consult. Make sure you do your own due diligence and research. But obviously, I wouldn't feel safe if I'm using a broker that's failing to obviously protect themselves, protecting the customer info. But when you go deeper into this, you can see retention of brokerage data. They failed to maintain copies of core operational databases in a manner that ensured legally required records were protected from deletion or modification for the required length of time. So you're saying that the brokers have failed to keep the correct and right data, which showcases every trade that was happening. That, again, very, very interesting, because when you understand in terms of who Robinhood were working with, who they were trying to help, the institutions and not the retail, and that they will fail to keep the right data, what can we get from him? The manipulation of stocks. We saw how the buy button was removed from AMC and GME, and now we're seeing that they're saying they didn't keep the right data. They didn't maintain the copies of their core operational databases. Again, starting to get suspicious. Furthermore, failure to maintain customer communications. Another thing that should be worrying, especially if you're a user, mainly throughout as legally required between 2020 and 2021. Again, furthermore, in addition to this, what they have was fractional share trading and stock lending. In connection with his stock lending and fractional share trading programs, Robinhood Securities failed to comply with regulations show. Now, we've talked about this already. Stock lending, you guys should understand what's happening here. When you stock lend, you obviously manipulate and you can suppress AMC, and you can do this multiple times over. It's how naked shorts are created, and brokers are the biggest culprit of that. So when you have a broker that's failing to do the correct stock lending, that's failing to retaining their brokerage data, something is happening. Fractional share trading, another thing that we talked about in terms of how it can be used to manipulate the price. Now, this should already be shocking, because everything that they're being fined for are the exact things that allow institutions to obviously manipulate and suppress the price and infinite short AMC. But the final thing and another thing, they failed to find that Robinhood Securities violated rules 200, 203, and 204. The order further finds that both firms violated rule 30. And so this is obviously something that should definitely be looked at, and it should definitely be something that is worrying when a brokerage that has been known for helping out institutions to screw over retail has failed to keep the right copies, has failed to do the correct things. And that's why we always constantly see how AMC and GME share price are being manipulated and suppressed when one of the biggest retail broker, or at least what they claim to be, because they make investing easier for retail investors, are also in the same hand in terms of failing to actually maintain a fair market. And so this is clearly that something is obviously ridiculous. And another thing, so we talked about how brokerage is obviously worrying. You can also see here Switzerland's former finance minister says that UBS poses too much risk after inheriting Credit Suisse liabilities. Now we know where these are, GME and AMC SWAPS, and you can see how these are becoming more and more of a problem, and that's why everyone is starting to worry. And you guys, thanks for watching. I'll catch you guys next time.